as you are emerging into this new world, this new economy, asking yourselves, are the shifts that I made enough? What are others in the industry doing that I'm not? How do I compare? And I know you're asking yourselves this because this comes up in conversation with our clients at Point to Point all the time. Every day we're being asked about, what does it mean to be marketing in today's world? And so we wanted to provide better data, more than just anecdotal evidence or insights. We wanted to be able to really have a grasp of the industry trends and be able to relay them to you in a meaningful way. So we did this study along with Centro and AIA. So excited to share with you the results and have a great discussion. So we found 3 key things as we dug into the data. First, the digital era has arrived for building materials. Woohoo! And the good news is we're scaling quickly. As an industry, we are adopting more contemporary communication channels and really pushing our organizations forward. But on the flip side, there are still some key areas where we are moving too slowly. This new world with digital channels and the pace of communication is a lot faster than where we were even in 2019. And we need to learn how to accelerate our cadence and our pace to keep in line with customer expectations. And one of the biggest areas that we see our pace needing to accelerate is in measurement. Our measurement on the whole is lagging, and as an industry, we are paying higher than needed customer acquisition costs. So we have a real opportunity to drive efficiencies for our organizations as we become more data savvy. So I have the distinct pleasure of being joined today by Dave Gensler and Rebecca Grounds from Centro and AIA respectively. I'm Megan Kacvinsky. I am the CEO of Point to Point. We are a digital marketing communications agency that is specialized in manufacturing and has a real deep focus in the building materials segment. And Dave?
Hi, I'm Dave Gensler, currently the Senior Vice President of Client Development over at Centro. I have an extensive history within the traditional and paid digital media industry across multiple organizations, News Corp and AOL and Time Inc. And at Centro, we enable agencies and advertisers to run their paid digital media efficiently and effectively through our platform, and it's called Basis. So great to be here. Thanks for having me.
Hi, I'm Rebecca Grounds, and I'm the Senior Director of Corporate Partnerships at the American Institute of Architects. I've been with AIA about 15 years, and in this role, helping connect manufacturers and architects for about 10. Thanks for having me.
It's great. It's great to have you guys here. And it's been a lot of fun, to go through the data and to hear based off of all of our backgrounds and our different perspectives, what we see happening in the industry. I've learned from the data and I've learned from both of you. So excited to dig in. And as we go through today, we are going to leave time at the end for questions. So please put your questions in the chat, and then we will be answering those at the end of the presentation. So just quick background on the study. The study was deployed in March of this year, and we had over 156 manufacturers respond. That was the primary qualification. The first screening question was, are you a manufacturer in the building materials industry? And then what do you manufacture? And then we were really looking for executive level respondents, and we got them. 55% of the people who responded to the survey were in the C-suite or at the executive level. And the reason that we wanted that level is that we wanted decision makers, people like yourselves that are on the webinar today, people who are directing the futures of your organizations, people with a purview over multiple different channels, all of the audience segments, people who had some perspective that they could pull from. And then we also wanted companies that had some scale. So you had to be a minimum of $100 million or more in revenue to be able to respond to the survey. And 82% of the respondents were $500 million or more. And again, the reason here is that we wanted organizations that had some significant investment in marketing, that had some experience with multiple different tactics, multiple different audience segments, and could give their point of view. If you are smaller than that, you still, I think, will get a ton of value out of this, because you will see how organizations are evolving as they scale, and it will have a lot of applicability back to your business as well. So as I mentioned at the beginning, the digital era is here and scaling quickly. So what does that mean? So when we asked what percentage of your company's B2B marketing budget was directed to the following channels in 2020, the top 3 responses were BIM specs product data, email marketing automation, and digital display. And we thought this was fantastic because this is exactly how we at Point to Point recommend our clients build their marketing strategies. You want to start at the point of conversion. You want to start with your product information and make sure that everything is ready. When someone's ready to raise their hand and convert or put it in the cart or, look for technical details, you need to have them there. Those are your most intended buyers. So you are investing your dollars in the right place. And then from there, scaling into email and marketing automation, these are channels that are heavily tied back to your customer database or identified prospects. And that's exactly 9 times out of 10, when you have a message, those are the people that you want to be telling it to first. And so the fact that that's the next channel is again, you're spot on. And then from there, you want to start building more top of funnel awareness and brand awareness for your products and services, your brand as a whole, using tactics like digital display. So on the whole, we see, this is exactly what we think you should be doing. The other thing that's interesting is that we see really taking an omni-channel approach. And if you look from the top to the bottom, everything other than other, so all the way from BIM specs product data down to radio, you'll see the range is not that great. It's 11% to 5%. So that means that you understand that you can't invest only in one channel and expect to have the impact with your customer. You need to be hitting them multiple times. You need to be hitting them in different channels with different messages all around the same theme in order to really get them to begin to raise their hand and be interested in conversion. So Dave, you have a really varied media background and you've been experiencing the digital evolution all the way from print to mobile to where you are today. So as you look at this data, what is your perspective? What do you see here?
Yeah, the study was interesting. I think for me, what it demonstrates is, media's evolved, right? And it continues to evolve. And if you think over the past, 60, 100 years, you have platforms like the Postal Service and telephones and fax machines. And that's evolved into email and social media and demand side platforms and customer data platforms, right? You also think of, how the different cost types have changed. So what used to be column inches and cost per spot, that's now evolved into cost per click and cost per thousand and cost per completed view. Even KPIs, right? They're changing and they're evolving today as we see it, right? We're always looking at things like GRPs and impressions and clicks, which we still look at, but that's now evolved into things like brand awareness and brand lift studies and shares and likes and attribution and verifiable walk-ins. And you said it before, right? So it is about integrated marketing campaigns is how I see it and how that affects the greater marketing mix. So traditional channels are still incredibly important. Print, especially for this industry, is very relevant along with TV and radio and billboards, right? But there is now new channels. It's streaming TV and it's satellite radio and it's programmatic audio and search and social. So yeah, this is going to be all about how do you hit and convert on a specific target audience, and whether that's architects, whether you're trying to find contractors, or whether you're just trying to find soccer dads with 2 pets and shop at Home Depot, right? You're going to need to do a mix of all these types of media, and that's going to just continue to evolve over time.
Mm-hmm. Yeah, it's interesting. I like the fact that you said that, print is not to be disregarded, because we wholeheartedly believe in that, and it can still be a really effective channel. But I think the word print itself is a bit of a misnomer, because what print we see offering in terms of value back to BPMs is that all these channels require a ton of content. And BPMs on the whole are not great content creators. And the print publications have an edge, even on agencies like Point to Point, where they have a lot of great known influencers that they have established partnerships with, that you can help get some great endorsements, or you can get some custom home builds, or you can get placement in specific construction projects. And if you have a plan for how you're going to use that content outside of your print partnership, and you're going to use it for your own brand and your own channels and in your sales meetings, you can get so much value out of that. So we really think of them as content integrations or custom integrations versus just a print partner. Rebecca, is there anything that's jumping out at you as you see this?
Yeah, absolutely. I would agree. Print is not dead. And for technical information and educational content, that can be seen as a trusted source. But also agree on the omni-channel. We see the most successful campaigns being ones that are integrated campaigns across channels. This audience wants both the big, beautiful project image and the detailed product information. And you need different channels for those different needs. In terms of social media, architects are increasingly looking to social media for inspiration in the design stage. The numbers are not astronomical. We're gauging that at about 25%, but the numbers have doubled since 2016. And obviously, not surprisingly, younger architects in particular use social media. So that usage number is expected to rise as they enter the workforce.
Yeah, we see a lot with social media as a really great channel for activation architects, interior designers, contractors too. And we'll get to that audience specific discussion in a little bit here. So it's not only where you guys started investing in 2020, but it's also where on the whole our industry is going as we look to the future. So the last slide was asking what you did in 2020 and then comparing it to where you guys are going. This is asking what channels are going to grow importance through 2022. And just like we were just talking about, social media, paid social media is where the industry is definitely raising a hand and saying that is where we are going to invest in the future. Still up with digital display, email marketing, and BIM up next. What's interesting is those offline channels down at the bottom, also the print, radio, and out of home. I have an easier time with print and radio because of the targeting capabilities that are there. I think that out of home number will be really interesting to watch as this digital evolution really takes hold, because it's so hard to measure who actually is going past your billboard and get targeted to just a trade audience. We're talking about architects, designers, contractors, the channel dealers, so in my mind, that's much more of a direct to consumer channel that I could rationalize it that way versus a trade channel. So that might be a good place for people that are still investing in out of home, really asking yourselves why, or thinking about reallocating that budget to more of a test budget could be a really good place to get started. So we're going to do this a couple times as we go through the presentation, where we're going to show you the data for the industry as a whole, and then we're going to break it down by size of organization. And I recognize this is a bit of an eye chart, but this is being recorded and there is a white paper in the presentation, so you have plenty of time to sit with the data and think about it for your own organization. So what we're showing here is the breakdown in channel usage by size of organization. And what we see is that larger organizations are investing in omni-channel experiences at a greater rate. And this isn't surprising because larger organizations, in theory, have more budget and probably a little bit more sophistication in terms of, having had some experience within a channel. When we really dig into this though, and what jumped out at Dave and Rebecca and I was when we looked at the $100 million to $500 million companies, really doing a lot in social media. So paid social media is really high. Organic social media is pretty high as well. And then video, really high. So clearly using the social channel and fueling it with video content, which is a great place to get started. What gave us some concern was more of those of you in the 500 million to $1 billion range, where we just didn't see as much consistency in a strategy and frequently indexing behind the 100 million to 500 million and the $1 billion or more. It's like you're kind of caught in the middle. You're not agile enough. You're not small enough to be as agile or as nimble as the small guys, and you don't have the staff or the experience to be as out there and aggressive as the bigger guys, so I think if you're in this range, you really have to be asking yourself, what is our strategy? And why is that our strategy? Because the data isn't really making a strategy super clear through the way the industry, you all are responding as a whole. So Dave, you have a lot of clients in the building materials industry, but you also have clients in a lot of other industries. And I'm curious, is this, as you see the size of the organization and the modeling, the mix that they're using, how do we stack up as an industry compared to others? Is this typical? Are there things that are unique to us? How do you view this data?
Yeah, I look at it as it's consistent, right? So you've got these, as you said it, right? There's the larger organizations, and I like to think of it that they have greater diversity of thought just because they have more employees, right? They have longer tenured employees typically, and they thus have more resources, right? So they've got more money to spend, and they tend to do more omni-channel approach versus some of the smaller or mid-sized. And again, this goes across verticals and categories. Some of those smaller to mid-sized organizations, they need to be more conscious of every single dollar they spend, how they spend it, where they spend it. Granted, their advantage is they can make faster decisions. They can create change faster and be a lot more nimble than these larger organizations typically that get stuck in that kind of, approval process and gaining systems, analysis by paralysis, right? So, but it all continues to go back to what we talked a little earlier, which is having a balanced marketing mix, which is going to really help drive that kind of full funnel approach across a lot of different marketing opportunities.
Yeah, on the larger side, you do see the larger the organization, the more bureaucracy or approvals that you need to get, the harder it is to turn the ship, and so it was interesting to see as you put that lens on the data, not just here, but on some of the subsequent slides too. How
by the way, Megan, that's like CPG, auto, right? These are categories that are similar. It's like trying to turn an aircraft carrier. It just takes time, right? It's going to evolve.
Takes data. We'll get there. So one of the numbers that really jumped out at us was really specific to more of the architectural or specification community. And if you look at this line here on BIM specs and product data, and you look at who is viewing that as an important channel, you can see that the larger organizations are really indexing much more heavily here. And Rebecca has some really interesting data points on the importance of BIM in particular, and in architectural, well, not even in just building materials relationships across the board, building materials audiences.
Yeah, absolutely. I'm really happy to see BIM high up on the list here. We get asked a lot if BIM is a trend, if firms are really using it. The answer is yes, definitely. 100% of large firms and more than a third of small firms are using BIM. Mid-sized firms are where we see the largest year-over-year uptick in digital modeling use, which means overall the share of firms using BIM software in some capacity continues to increase to about 60% of firms overall. And I'd say those that do use it heavily, with 3/4 of their revenue coming from projects using BIM. Only 20% of firms currently do not use a virtual building software and don't plan to acquire it. But even that number is decreasing every year by a handful of points. One of the things that I found really interesting recently is kind of how you know that something is adopted and that it's here to stay. And I think one of the ways that you know that building information modeling is here to stay is that it's adopted across disciplines. We have not surveyed this yet, maybe AGC has, but informally, we've seen that general contractors are using it. And also really interestingly, that there's a trend towards owners using it post-occupancy. That model becomes a nice repository of information related to the total project. So that warranty and maintenance information, product info, paint color, it's all in one place, which is really helpful for someone like a facility manager. And then just the last thing that I would say here, I would note that in our satisfaction survey, BIM availability and website usability are consistently areas of underperformance from manufacturers. So there's a lot of opportunity for growth here.
Mm-hmm. Yeah, I think that's actually a good segue to some of the stuff we're going to talk about in a minute here. But I was talking to someone this morning about BIM modeling software, and they were even bringing into it artificial intelligence and all this next evolution of what's going to happen. And when you see the others that are down there, I'll tell you anecdotally, that is people mentioning artificial intelligence, augmented reality, virtual reality, things that, you know, we didn't even line item are showing up as being on people's radar. So contractor marketing is the most digitally advanced. And at first we were like, why would that be? And then really started thinking about it, and it makes sense because contractors are where we as an industry have been communicating directly through digital marketing for the longest. So you look at these other channels and you look at builders, dealers, distributors, architects, designers. Those are still, or at least pre-pandemic, we're still heavily sales-driven, face-to-face a lot of times, communications. But contractors are fragmented. You know, there's not a lot of scale in certain categories of the contractors themselves are small business owners. You know, crews of 10 can be large. And so we have been using digital media to reach contractors and pull demand through the channel for a longer period of time than we have been using digital for scale for these other segments. The other way that we think that you could use this data would be to just go back and look at your own marketing mix and think about, how am I using these channels as it relates to each of these segments? And how does my marketing mix compare to what others in the industry are reporting? And then ask yourself, you know, why are you if you aren't at parity, you know, why not? Are you ahead of the strategy? Does this provoke more conversation, you know, with your team internally? You know, as we at Point to Point look at this against a lot of our client spends or their modeling that they're doing, there's some points where it matches up. There's others where it's bringing forward new ideas. There's a ton of discussion that you could be leading your organization in off of just this slide alone. So Rebecca touched on it. She mentioned that website experiences are challenging, and that is something that product data is super important. And we see that BPMs that you on the whole are recognizing the importance of needing to improve your customer experience with marketing because you're investing more money in marketing. So this question was, what is your company's B2B marketing budget as a percentage of total sales? So in 2019, the category was at 15% of sales. And in 2021, it has grown to 18%. And those gains are significant because these are organizations that are $100 million in revenue or larger. So a percentage point, you know, is hundreds, millions of dollars, right? And so you're demonstrating that you understand the importance of the shift. And there's a McKinsey study that came out that said 70 to 80% of B2B decision makers prefer remote human interactions or digital self-service. And that's because it's easier to schedule, there's savings on travel, and there's still safety concerns that exist. And so when you think about what your audiences are looking for, you need to make sure that you're improving your marketing materials to be more personalized, more customized, more tailored, to have more digital tooling to help with product selection, to just really be able to create more of that personalized customer experience that used to occur across a desk or a golf course. But now you need to be generating the same type of interaction as best you can digitally. And here we broke it down by audience or by size of organization, and saw that larger organizations are increasing your budgets at a greater rate. So those that are $1 billion or more had the most significant increase. And going back to the slide where we saw the better omni-channel mix coming from the larger organizations, looks like those larger organizations are also able to better rationalize internally what they're spending the money on and why, and gaining incremental dollars from their organizations to continue to move the company forward. And what gives me some concern here, maybe, is the $100 million to $500 million companies, because you've stayed flat. And the reason I say maybe is that you can maybe categorize this range, this revenue range, as more of the challenger brands. And as we mentioned before, you do have more agility typically in terms of what you're doing. And maybe you are testing and learning faster. So maybe you didn't need to increase your spend as much as some of the larger organizations did to be able to rationalize what the spend is. On the other hand, typically a challenger brand, I mean, the legacy says you need to outspend a champion brand 7-1 to cut through. I'm not sure with today's targeting strategies that holds, but it means that you're not outspending the competition because they're spending a higher percentage of sales off of a larger revenue base. And so there's significantly more dollars in the market. I am proud of the $1 billion or more, those champion brands, because my concern was that you might feel like we have always held the share, we are the category leader, everyone knows our brand, and you might have felt like you could rest on those laurels, but this is a period of great disruption. And so you either need to disrupt or you will be disrupted. And it seems like you're rising to the occasion and understanding the significance of what is going on and really responding to be able to keep your brand and your share, at least at parity or hopefully growing from where you had been before.
Yeah, Megan, this ties back to the conversation a little earlier, just about being more efficient, being more effective with the spend that you have. So these challenger brands, they have to leverage what they have, which is the speed, the nimbleness, in order to be able to beat to really challenge themselves to compete with some of the large organizations. And that's what makes the challenger brand so incredibly interesting to watch, because they're going to be doing things that probably have a bit more risk, but they're going to be incredibly effective and efficient.
Mm-hmm. Yeah, a lot more test and learn, probably more, I don't know if I would say appetite for failure, maybe tolerance for failure, but failing forward, failing with a solid learning. I don't know that any organization has an appetite for failure, but
you're right. Fail fast, learn fast, and move on and hopefully there's a couple of things you do right along the way too.
Yeah. And the speed is interesting to talk about because we are still moving too slowly. So this pace, this world that we live in is a fast-paced world, and we need to be thinking about how we are maintaining our momentum. So one of the first ways that this showed up in the data was seeing how often you are updating your marketing strategies. And if you're not updating your marketing strategy quarterly, you're not doing it often enough. And 57% of you are still updating your marketing strategies biannually or at even lesser frequency. And we're not saying that you shouldn't have a marketing strategy with a longer vision, that you should only be planning things quarterly, but you need to be coming back and asking yourself, are these still the right messages, the right channels, the right tactics to be using, the right audiences to be going after, given where the market is right now? And if you just reflect on the last 18 months, we had a global pandemic. We had a global recession. We had major weather events in the form of floods and fires and freezes, in addition to our normal hurricanes and tornadoes. We had a worsening and deepening labor shortage, labor crisis. We have had supply chain disruption. But we've also had a really strong residential segment. And now we're seeing commercial come back really strong as well. And so, we're in a really interesting place in the building materials world because our segments are actually thriving and have significant demand in a time when a lot of other segments have had none. And so if you aren't revisiting your marketing strategy, you could be putting messages in market for products that you don't have available, for products that you're not making good margin on, for service messages that you can't live up to, so you have to make sure that you're really coming back to, is what we planned still right and why? And we're seeing clients switch messaging to be more tooling or service-based. We're seeing clients actually do a lot with raising awareness of the trades and the value of a career in the trades, or recruitment-based marketing. We're seeing people get really creative, because as there's all this disruption in our channel and all these price increases and, you know, product shortages and things too, you don't want to go dark. You don't want to not be putting messages in front of your customer. That would be the worst thing. You have to be thinking about what is the right thing.
Yeah, Megan, it's funny. I think this is where the BPMs are catching up to some of the other categories or verticals that are probably a little bit more digitally, have evolved a little bit more digitally, because that old school kind of concept of set it and forget it of an annual plan,
Yeah.
no, that's moved on. We've evolved from that, I guess is the best way to put that.
Yeah.
Like, yes, incredibly important to have that vision, have that initial meeting, but then it's quarterly, it's monthly reviews on performance. And we're seeing it with some of the larger organizations, right? They're meeting, their C-suites meeting more often, which is giving them a bit of a competitive advantage. So to have these smaller to mid-sized organizations evolve that discussion around planning and doing that more often and having better communication both internally and externally, that should start enabling those organizations to use their size to their advantage, as we said before about being more nimble. And you know, a phrase my old boss used to say, which would annoy me at the time, but actually resonates quite a bit here, which is plan your work and work your plan. And
Yeah.
the more that you're working that plan, the more real-time decision that can be made to ultimately, you know, affect change for your organization.
Mm-hmm. Yeah, absolutely. And I think that I'm glad you mentioned the importance of communication, not just externally, but internally as well, because not on this slide, but the next one, we're going to talk about that. So hold on one second. So again, going back to the who's doing it better, the big guys, the more agile guys, you know, what's going on here? Companies of all sizes would actually benefit from greater frequency of marketing strategy review. So every size organization has an opportunity here. Only 49% of companies with $1 billion or more are revisiting your marketing strategies quarterly. And that's the largest percentage that there is. So I recognize that it could be difficult in some organizations to just come back and say, hey, I went to this webinar and people said we're moving too slow and we got to move to quarterly, and, you know, boom, you know, change done, right? So I challenge you to start with a smaller group of people. You know, take the people that are in just your department, or try and get a small cross-functional team together and say, let's start doing this, and say, ask ourselves, is this still right, and why? You know, why is the single most important question that you can constantly be asking yourself and your organization? And I'm going to guess that you're going to come up with some ideas that were better than the ideas that you had before. And then you're going to want to share them with others. And then they're going to say, how did you do this? Or, you know, what was them? And you're going to say, we did this quarterly review. It's going to start to get traction and interest, you know, that will help it gain momentum internally. So, you know, influence what you can. Start small, be the change you want to see in the world, and get the quarterly review cycle going. So now, Dave, back to where you were before. There is a disconnect between executives and management. So here we're defining executives to be C-suite and VPs, and management as directors and managers. And you can see at the C-suite, there is maybe more of a quarterly review cycle going. 51% reported that they were engaging in that. But only 32% of directors and managers mirrored that back. So that means that when those conversations are happening at the C-suite, they're not getting filtered through the whole organization. And this is an issue because the C-suite doesn't typically do a lot of the execution. It's at the management level, directors and managers. And so if directors and managers continue to execute the old plan and not the new vision, you know, you're still at risk of getting the wrong messages in market. And so internal communication is equally important, if not more than the external communication that's going on. And it's hard, you know, because in marketing, you're not just responsible for these messages. You know, there's the product issues, there's the supply chain disruption, there's all these other things that we mentioned that you also have to be communicating internally. So we're not diving into it a ton on the webinar today, but there is a white paper where we asked BPMs about collaboration tools and communication tools that you're using internally to help connect the dots. And I'd really encourage you to look at what platforms that you're using to make sure everybody stays on the same page. Because if you're not all singing from the same songbook, you know, someone's going to be out of tune and your customers are going to feel it. So the last part of this, we're moving too slow, is maybe not good news for some that are actually on the webinar today. And that is that disruption is coming for the BPM CMO. And when we looked at the tenure of CMOs in our industry, the weighted average was 8 years. CMOs had been in the seat for 8 years. CMOs on the whole average less than 3.5 years, 3.3 years. And this is accelerating. It's like every year CMOs are losing a month. And what has changed is that the CMO is really viewed as the CSO or the CRO. We don't have a lot of CROs in building materials yet. You're in charge of driving sales. And if your organization, if you can't show how your marketing investment is reaching your customers and helping to scale your business and bringing that data back into the company, your organization is going to find a CMO or a marketing leader that will. And so we would say you need to disrupt your organizations. If you aren't already starting to think about how you get to this more contemporary marketing communications reality with your end user segments, then you need to start thinking about it now, or your CEO is going to find someone who will. CEO tenure is increasing while CMO tenure is decreasing. And it's like the CMO is becoming the fall guy. So now CEOs on average work with 3 CMOs, where it used to be almost parity. So Rebecca, I'm curious, you know, at AIA, you work with a lot of different marketing executives. You know, are you seeing new people come into C-suite roles that are working with AIA?
We are, definitely. And I would say anecdotally, we're seeing an increase in new marketing staff that comes from a consumer products or retail background. And for me, I would say that sometimes can be harder to get them up to speed on the industry and for them to really understand that you're not just selling a product, but you're selling your category expertise, knowledge, and technical staff. That's kind of been a recurring hurdle for us. But on the flip side, I would say they come with a broad audience background and marketing to a wider demographic. And I think that's going to be a positive with a shift in industry demographics. As I'm sure you know, the future staffing makeup will likely continue to be more diverse, with women being one of the fastest growing architect demographics and nearly half of emerging professionals and students identifying as being from a racially or ethnically diverse demographic group. So I think that background that they bring is going to be a real plus in the future.
Yeah, I agree. It makes me really excited to think about a more diverse building materials industry, because study after study shows that you get better ideas from a more diverse group of people. And we haven't been a very diverse industry. So that means that the best is ahead for us as we get a more diverse group of people in decision-making or just throughout the industry as a whole. We also see a lot of CPG executives coming in. And there's a lot of similarities between building materials and CPG. I mean, you have kind of 2 sales. You have the sales to the channel, the B2B sale to the channel, to the distribution, and then you have the sale also to the end user and trying to drive demand through the channel. And we see that, you know, CPG professionals are usually a little bit faster paced, more data savvy, more comfortable with technology. And so I think a lot of that change can be really good. But there are a few places where, and it's really in these segments, in the trade segments, where CPG professionals, I think, have a hard time understanding the interrelatedness and the importance of each, and tend to want to go to scale, direct to consumer, versus focusing on, you know, the contractor, the dealer, or others, and the value that they create in the channel as well. So it is a delicate balance, and certainly, you know, not unlimited budgets, but it's important, I think, for everyone to recognize the nuance that occurs within building materials itself. All right, we'll get off that scary slide now, and we'll talk about how you can be the disruptor. And we believe it really comes through better measurement and better data. and that you have an opportunity to be a real hero for your organization by leading them in this direction and helping to reduce the acquisition costs. So first, the bad news, our cost per lead is super duper high. So you all self-reported that you're paying $252 per lead in building materials. And as we compare that to all other industry segments, we are paying a price premium right now. There are two things that are driving this. One is we're just becoming more data savvy. We're just starting to invest in these channels and tactics that are feeding the data back to us that help us understand how we can optimize results and really drive these costs down. The other part is that our customers are super valuable to our organization. So when you, get a new stocking distributor, when you flip a contractor and, he's going to be using your product for the rest of his life, when you get an architect to start using your spec, that could be hundreds of thousands of dollars, if not millions of dollars for your organization over the next 5, 10, 15 years. And so it might not be bad to pay more. Like, we certainly don't need to be aspiring to be retail at $34. But I think IT, computer, and technical services is a good industry for us to look at because it's similar to ours in a lot of different ways, both in terms of the value of the tickets and the longevity of the relationship. And I think we have an opportunity to get closer to where they are. Certainly IT, computer, and technical services has been more technically advanced than building materials for a while. And so we could really look at them as a benchmark and say, how do we get closer to where they are right now? So Rebecca, when you talk to people at AIA, when you talk to your customers from AIA, your clients, and you talk about cost per lead, how does that conversation go?
Yeah, it never feels good to be the highest price, right? Yeah. But it can seem high. Mm-hmm. You need to think about the life of that lead though. Previous projects remain the most common source of information for architects during the design phase. So 89% of architects reuse specs, 89%. So even though architects have become more experimental, their past experience still carries the most weight. This can be partially because of liability concerns with untried products or limited time to research new products, existing relationships with manufacturers. But this is something that we track in our Architect's Journey to Specification report, and this number continues to go up year over year. Architects continue to be more inclined to copy and paste content from previous specs. And this is becoming even more common among millennial architects. So expect this trend away from writing specs from scratch to continue, and really think about the life of that lead.
Yeah, and Megan, I'd even add that this is about the quality of the lead, and especially in a category like this. You could go to the volume play, but often with volume, you lose quality, and is that really worth it? And I'd argue, especially for some of the industries that's on the slide towards the bottom, it couldn't be more important to have good quality leads, because to Rebecca's point, then it's all about lifetime value of that lead or that acquisition.
Dave, it's like you've seen some of the upcoming slides where we look
never
at quality lead. Yeah. But you're totally right. So what's worse, are we paying $252 for a not great lead, for a lead that's going to erode the trust and the relationship that needs to exist between sales and marketing. So if you're paying $252 for bad leads and asking your sales organization to follow up on them, like that's going to be a real deal breaker internally. So we see measurement lagging the digital evolution. And by this, we mean these more qualitative metrics like brand awareness and reach and targeting are still the top two metrics that we are using to measure marketing effectiveness. And more quantitative metrics like website traffic or quality of leads have not gotten there yet. And we're not saying that brand awareness isn't important when we suggest that more focus on quantitative measurement. I mean, no one can, research your product, specify your product, flip a spec, do any of these things until they are aware that it exists. But it's the measurement of brand awareness that is the issue. And I think this is where some of the CPG background also comes into play, because measuring brand awareness in a CPG world where you have millions of customers and millions more budget, and can do things deeper, it can have more meaning. In our industry where you have, not millions of dollars typically in terms of an activation budget, you want to be getting customer data back that is really rich and meaningful and giving you as much as you can on a one-to-one customer level versus just the category or industry as a whole. And so we really like Dave suggested, this idea of quality of leads, and it was great to see that quality of leads was higher than number of leads. You guys get that, you understand that it's not quantity, it is quality. But it's concerning that we're not really doing what we need to with the data that we're receiving. And it's reflected in the fact that we're paying a higher acquisition cost. And this gives us confidence that as we start to use the data better, that we can really drive down the number that we saw on the previous slide and make it a lot less scary. So Rebecca, it was interesting when we were getting ready for this and we talked about brand awareness and brand perception, and you shared an anecdote about how AIA responds when asked to do brand perception studies, and had a kind of even a different perspective about why they weren't the right tool for the architect community in particular.
Yeah, I do think it jives with what you were saying though about trying to move the industry forward. So what we found, we do a lot of surveys, and for our audience, for ourselves, and also on behalf of clients, but we almost never do a straight brand preference study. So we found that it doesn't resonate well with our audience. They are most interested in helping manufacturers do better, create better products, have more functional websites, but just measuring brand on behalf of a manufacturer isn't of importance to moving the industry forward. And therefore, you don't get good completion rates. And without good completion rates, you don't have meaningful results.
Yeah, the data isn't going to deliver any insight back to your organization anyways. So again, we cut the data by size to see what was happening. And, it's everyone could benefit from this. And we're getting a little tight on time, so I'm not going to belabor it, but just say that, every single one of you could go back to your organization and challenge yourself to take your organization one step deeper in the funnel. So if you're not using any of this quantitative data yet, start at just website traffic and start looking at your trends there. If you're at website traffic, start with quantity of lead, because you need some quantity to figure out what is quality, then go to quality. Just always be challenging yourself and your organization to take it one step beyond where you are today, because it pays off. So here, when companies that said they were measuring brand awareness are paying $263 per lead, companies that are measuring leads are paying $250 a lead. So the dollar figure difference is about $13.58, and that's a 5% reduction. But the further in the funnel you go, the more impact that it has. So companies that are measuring brand awareness are paying $1,300 for a new customer. People that are measuring based off of leads are paying $1,200 to acquire a new customer. That's almost $117 improvement and a 9% reduction in your costs. So while marketing budgets are up, so are the channel choices that you have, so are the pressures on your organization to deliver results. And here's a great way that you can begin to show the impact on marketing in terms of the cost to acquire a customer going down and giving more efficiency in your program so that you can expand and start to generate more customer relationships using the same amount of money. So you should always be challenging yourself, from a benchmark perspective on cost per lead. Some of you may be lower, some of you may be higher. I'll be honest, I don't really know that it makes a difference where the industry is here. The only thing you need to worry about is yourself, right? And you should always be asking yourself, how can we improve from where we are today? So I want to make sure that we have some time for questions. There is a whole part about, action items that you can take that we've touched on as we've gone throughout. This is elaborated on a bit in the white paper as well. But now I think, Jake, you were going to be mining the chat for us and see if you have a few stumpers out there.
Yeah, let's get into it. So this
Yeah.
question came from Brandon D'Elia, and I'm going to kind of summarize, and this question's for Dave. So his organization says they're struggling to find the right combination of filters to accurately and efficiently target the relevant audiences in the paid social channel. So what's really like a good first step to move in that direction to let you know who you should be targeting and how much should you be spending?
Well, and Megan, feel free to chime in here as well. I would say it's all about identifying who your target audience is. Whether you do that through social, whether you do that through search, whether you do that through programmatic, understand that there's in identifying that audience and starting to create what we would call like lookalike audiences off of that target audience, and then applying that to me, then we start talking about which channel is appropriate to target them. And also understanding the role of each of those channels. The role of programmatic is different than the role of search. So we talked about it a little bit earlier, but that concept of attribution and understanding what is feeding the top of the funnel and driving down into the lower funnel. And as you know, you're going to be more efficient in doing that, and understanding programmatic or things like TV or things like radio, they're going to be doing more top of funnel awareness building activity, but driving leads down into the lower part of the funnel, where search and social are going to be more attractive because their attribution is typically what we would call a last click model. But it all comes back to trying to answer your question is identifying who that target audience is. And quite frankly, I look to partners like a Point to Point to be able to help do those types of audience identification. And they're incredibly good at that. And then working with media partners to activate against it.
Yeah, the other thing that I'd just add on to that, Dave, is that starting with your customer database, like we mentioned, how you build the funnel, product data, current customers backwards, focusing on first party data and building out your database to be able to do database matchback is, where we see a lot of success. And Google gave us a bit of a reprieve today because they are changing their timeline for the removal of cookies. And so that is allowing us to really say, what do we need to do before 2023 to make sure that we have the best database for the customers that are in our segment so that we can then go out and continue to activate against them in the future.
First party data is going to be key moving forward. Absolutely correct.
Yep.
So Rebecca, how do you get started with BIM? I think there were some questions from the audience and just understanding the full scope of BIM objects and what that includes and what architects are looking for. So what would be your recommendation to get started in that area?
Yeah, definitely. I think you want to look for a partner that can help you, not just with the object creation itself, but really an overall BIM strategy. I'm sure that there are many companies that can do this for you. One comes to top of mind, a partner of ours called BIMsmith. I would reach out to them and just start looking at what kind of overall strategy that you can have and not just the object creation.
Great. And yes, everyone, you are going to be getting a copy of the presentation and a recording in your inbox after the presentation. So that'll go out to everyone. Let's go to Dave again. There are some questions around defining digital display and the difference between, paid social, digital display, and programmatic. How do you see the difference between those?
Well, there's a wide variety of different type of display formats. So the way I think about display is being able to advertise and promote through websites, through apps, and being able to do that really just through an ad that's going to exist in different formats and in different areas. It's going to be banner ads. There's going to be side ads. It's going to be full takeovers. But to me, it goes back to, while a display unit is critically important, it works incredibly well to help drive awareness. You want to complement that with other forms. That could be native, that could be things like video. I mean, video is obviously one of the hottest things these days. Something that gets talked about all the time is now streaming television, right? Everybody's moving towards, the Rokus of the world and the Amazon Fire Sticks, right? So all of that is now evolving. So to me, it's how do you look at the entire paid digital ecosystem and being able to start thinking about where do I put some of those display ads, where do I put some of those video units and help complement one another to create a more well-balanced kind of integrated marketing campaign.
Piggybacking off that, Megan, Deanna's asking, how are you seeing video fit into strategies you're using for BPMs?
Well, I mean, video is the #1 form of content that is consumed, right? And regardless of whether you're a dealer or a contractor or an architect, you are a consumer. And so you're watching video. And there are really a lot more cost-effective ways to create video now. We're not thinking like video is something that you have to do a shoot for. You can do short form videos with animated GIFs, and there's a lot of templates or quick tools that you can even use online to get started. It's really more of a storytelling format. And we see really high levels of engagement when you create social content and then promote it, social video content, and then promote it. And that's something that I think is important to note too, that if you're going to do social media, you really need to have a paid component to it, because the organic algorithms do not prioritize brand or corporate pages. They prioritize individual pages. So if you're creating all this great content and you're only posting it organically on your corporate site or your corporate web social presence, you're not getting nearly the reach that you need to for the value that that asset could be providing. You really need to be putting some sponsored dollars behind it, going back to Brandon's question, and targeting the right customer and making sure that they're getting eyeballs on it. Jake, I think we might have time for just one more question.
All right, one more.
Yeah.
Megan, what goes into calculating a cost per lead?
Well, this is like asking, where does marketing end and sales begin? Cost per lead, the most common way to calculate cost per lead is working dollars. So working dollars, working media dollars, the money you're investing in paid social or programmatic media, display, print, those types of things. However, in today's modern marketing climate, a lot of the channels that we're talking about, like email, organic social, are owned channels. And so you certainly could calculate both a working media and maybe what we would call like a fully loaded cost per lead that would include production costs, any sort of partner costs, like if you're working with an agency like Point to Point, in addition to the cost of the media that is supporting the asset as well. So I'd encourage for you to look at it both ways. But the first most common way is working media. And that, I believe,
Great,
is
thank
the
you.
end.
Yeah.
Yeah. So, well,
Thanks
thank
everyone
all
for
of
your questions.
you. Yeah, those were great questions. So thanks everyone for jumping in and for joining us today. So we'll be sending this out, and please reach out to myself or Dave or Rebecca. We'd love to have follow-up conversations with any of you about how this applies specifically to your organization. So thanks everyone.